Hello and welcome to IG's early morning call. I'm Angela Barnes. Coming up on today's programme, the yen jumps to a 4-month high against the US dollar after the Bank of Japan's policy hint. In US jobs, the markets hope for a stronger non-farm payrolls report as US strikes come to an end. And in commodities, WTI and Brent are set for a 7th straight week of losses. But first, let's start with volatility and take a look at the VIX this morning. It's currently up on the day 0.27%. With lower volatility throughout November, this week has seen a slight increase. And with 30 minutes to go until the European markets open, this is how things are looking pre-market across Europe. Well, we've got the FTSE set for a higher open up 21%. That's 0.21%. We've got the CAC 40 up 0.18%, and Germany's DAX also set for a slightly higher open, pretty flat there though, 0.9% higher. Well, the FTSE 100 was trading flat by the end of the day yesterday, while the CAC and DAX ended lower. The markets are increasingly of the view that the European Central Bank may well be forced into cutting rates next year in response to slowing inflation in the early part. Well, overnight in Asia Pacific, this is how things looked overnight. Well, the Nikkei 225 down 1.68%. Hong Kong's Hang Seng down 0.10%, and Australia's S&P ASX 200 was up 0.30%. Well, so a pretty mixed bag there, and that's as Japan's third quarter GDP was revised downwards. Japan's Nikkei tumbled there, as you can see, after that GDP release. Meanwhile, India's Nifty 50 was above 21,000 for the first time ever, and that's after India's central bank held its benchmark lending rate steady at 6.5% in line with expectations. Now, let's have a look at how things were overnight in the US. Well, all three major indexes gained ground as the Dow and S&P both broke a 3-day losing streak. You can see the Dow ended up 0.17%, the S&P 500 up 0.80%, and the tech-heavy Nasdaq Composite also gained 1.37%. Well, Google parent company Alphabet gained more than 5% after the launch of its Gemini artificial intelligence model. Nvidia and AMD also gained more than 2% and 9% respectively. And let's just have a look at how things are looking pre-market in the US. Well, you can see that the US 500 set for a marginally lower open, as well as the Nasdaq down 0.17% pre-market, and also the Dow Jones. Well, actually, sorry, the Dow Wall Street is up 0.03% at the moment. Investors will be waiting for the all-important jobs report with non-farm payrolls today. Moving on, in other news, Japan's economy fell faster than the first estimated in the third quarter. Final estimates released overnight showed that consumer and business spending both shrank, driving down third quarter gross domestic product. The Japanese economy lost an annualised 2.9% in the third quarter. Markets had forecast a 2% decline. Capital expenditure fell 0.4%, and private consumption, which makes up more than half of the economy, fell 0.2% in the July to September quarter. Well, household spending weakness could remain a problem for months to come. Nominal salaries rose 1.5%, but with an inflation of more than 3%, wage growth in real terms was wiped off. Inflation-adjusted real wages dropped 2.3% in October, year over year, marking a 19th straight month of declines, according to the Labour Ministry. Well, this has an impact on household spending, which saw a decrease of 2.5% in the same month, falling for 8 months in a row, according to Internal Affairs Ministry data there. Meanwhile, as for the yen, well, it jumped nearly 2% yesterday after the Bank of Japan governor said policy management would become even more challenging from the year end heading into next year, and flagged several options for what could come next. Well, Kazuo Ueda told the Japanese parliament there are various options But we have not made a decision yet on which interest rate to target once we end our negative interest rate policy. On Wednesday, the Deputy Governor discussed what impact an exit from ultra-loose monetary policy could have on the economy. Now expectations are growing that the Bank of Japan will soon signal a winding down of its ultra-low rates policy, and its December 18 to 19 meeting could provide an opportunity. Well, if we just move over to the price chart for the US dollar, Japanese yen, and have a look at that. Well, it hit a 4-month low on Thursday, dipping to a level not seen since the 7th of August. And looking to the months ahead, if the US starts to reduce interest rates, 125 basis points of rate cuts are forecast by the Fed in 2024, and the Bank of Japan leaves policy unchanged. The rate differential between the two currencies will narrow, likely pushing the US dollar Japanese yen pair lower. But the view is that the Bank of Japan will soon signal a winding down, as noted there. Well, moving on, of course, today, all eyes are turned towards the US, where non-farm payrolls for the month of November are due at 1:30 p.m. A rather important report, as for a few weeks now, the market is trying to figure out how soon the US Federal Reserve will start cutting rates. Currently, the CME FedWatch tool forecasts a 90% chance of a Fed rate cut by May 2024 and a 60% possibility of a cut at the March meeting. While a softer report is likely to raise the chances of an earlier rate cut, we already had a few indications of the current state of employment in the US this week. On Tuesday, JOLTS job openings decreased by 617,000 to 8,733 million, marking the lowest number of openings since March 2021. On Wednesday, the ADP survey revealed that private businesses in the US hired 103,000 workers in November, below a downwardly revised 106,000 in October and missing expectations of 130,000. Well, if we take a quick look at the US dollar price chart, well, it's hardly moved on the news as traders prefer waiting for the NFP data, currently up 0.23% on the day. So what should we expect at 1:30 p.m? Well, the range of forecasts is rather wide. Expectations from the 74 economists polled by Reuters range from 100,000 to 275,000, setting the average estimate at 180,000. It looks like an improvement on October data when 150,000 jobs were created, but we have to remember that about 30,000 workers that have returned to work, that's after the UAW strikes. Well, unemployment rate should remain at 3.9%, its highest level since January 2022. As for average hourly earnings, they are forecast to have risen by 0.3% compared to October and by 4% on an annual basis. Well, moving on, yesterday morning, after Australia's ASX 200 close, Woodside Energy and Santos announced they were in preliminary talks to create an 80 billion Australian dollar to 52 billion Australian dollar global oil and gas giant deal. If the deal went ahead, it would be the largest corporate deal in the country for several years. Well, the new group would become the biggest liquefied natural gas producer in Australia, the world's #2 exporter of the commodity. However, let's remember that such a combination would come under close scrutiny from Australia's competition watchdog. I will just quickly show you the Santos price chart, currently up 6.15% and is up about 6% since the start of the year. Meanwhile, moving on to Berkeley Group, it has posted a pre-tax profit of £298 million, rising 4.6%, while operating margins were unchanged at 19.5%, with net operating costs reduced by £10 million to £79.7 million. While Berkeley Group's share price is up 31% this year. Meanwhile, moving over to commodities, and let's have a look at oil prices this morning, because WTI and Brent are on track to record a 7th consecutive week of losses. However, Brent, though, is currently up on the day, 2.03%, and WTI is up 1.98%. So actually, it doesn't look that way now, does it? So US crude oil trading around $70 a barrel, and Brent is also trading around $75 a barrel. However, you can see the trajectory there that it has been trading low. It's only slightly up on the day, much higher on the day. But of course, over the last few days, the prices have been much lower, despite those OPEC plus crude output voluntary cut announcements as well recently. Well, if oil prices are rising this morning, of course, as we can see ahead of US jobs report, fundamentals remain negative, though. The market is still concerned with global supply surplus and weak Chinese demand. Oil analysts also await tonight's Baker Hughes data. Last week, total rig counts rose by 3 to 625. The number of producing oil rigs remained at 500. Now, meanwhile, let's have a quick look at gold before we go and see how the price of gold is doing this morning, because it's been pushing up and staying up above the $2,000 level, and it's still there. Currently at 2029, up 0.06% on the day. And that's after a 2-day slide, after hitting a record as well on Monday. And it might maintain its upside momentum if US non-farm payrolls data offers evidence for a labour market slowdown. Let's just have a quick look at silver as well. That has been following a similar trajectory to gold of late, however, and you can see there's been a decline with silver as well since the 4th of December. It's been slightly up again this week, and on the day it's up 0.05%. Well, that's all we've got time for today on Early Morning Call. Thank you very much for watching, and do keep across all our IG platforms, our social media channels for updates and more market analysis.